As the pandemic disrupts businesses and social relations, this company's powerful 4G network connects the lives of millions of Filipinos here and abroad. Building relationships despite limited mobility is now made easier with its convenient and extensive communications services. Good afternoon. We, Kairos Investments, are proud to present to you the company that's been gearing up the country for the next level of connectivity. Globe Telecom Incorporated, one of the country's leading full-service telecommunications providers. With its years of industry experience, Globe has successfully pioneered telco and technological advancements by being the first to offer SMS services in the country and consistently introducing newer generations of networks. Now more than ever, Globe is positioned to capture growth opportunities in its business segments as work from home setup and distance learning continue to drive demand for digital solutions. Using the DCF valuation method, we arrived at a one-year target price of 2,375 pesos, offering an 18.3% upside. Taking into account the dividend income, our estimates affirm a 23.3% one-year total return. With this, we issue a buy recommendation on Globe. Our buy rating is grounded on 4 points. First, it is a market leader in a vast mobile business. Second, it is equipped to capture growth opportunities in the underpenetrated Philippine broadband space. Third, it is well positioned to benefit from the rise of the new era of digitalization. And finally, it has sustainable earnings supported by healthy margins and hefty operating cash flows.
For our first point, Globe remains to be the dominant player for mobile business, accounting for 56% of the market, mainly due to its strong brand image and wide service coverage. Globe's superior brand equity is attributable to its multiple customer touchpoints, extensive product portfolio, and its continuous efforts to forge strategic partnerships for value-added contents. Globe also has solid ESG initiatives that have supported communities through positive societal and ecological impact and sustainable digital transformation. Meanwhile, Globe's wide service coverage allows it to reach a greater market foothold. Amidst the entry of the third telco, the company reinforces its services through extensive cell site builds and upgrades. Apart from owning the majority of the 4G towers, which currently covers 93% of the whole country, Globe further intends to build 2,000 cell sites by 2021 alone, setting a record high in Globe's history. Moving forward, we believe that the heightening demand for data services will further drive Globe's mobile business, pushing the mobile penetration rate to 175% in 2025. We recognize these emerging opportunities will continue to propel growth in this segment.
Now to our second point. Although several businesses were shut down as a result of strict quarantine measures, we have noted that the shift to work from home setup, the use of e-learning, and the rising preference for digital entertainment opened up a significant opportunity for the telco industry. We see room for growth in the country's broadband sector as it poses a single-digit fiber broadband penetration, the lowest in Southeast Asia. As such, the tightening competition in the country and the government's call to improve telco services will prompt incumbents to increase capex spending to ramp up the quality of their services. We believe Globe is equipped to capitalize on the increasing broadband penetration as it expedites its fiberization program. Its aggressive network rollouts, migration from ADSL to FTTH, and sustainable investments in support of SDG number 9 put Globe ahead of the competition. For this reason, we believe Globe to capitalize on these growth prospects, driving a CAGR of 14% in its broadband segment. Moving on to our third point. The Philippine e-commerce industry is expected to grow at 22% CAGR, allowing Globe to capture growth opportunities in the segment as more businesses integrate within the digital economy. Furthermore, as active e-wallet users rose, Globe remained committed to continuously upgrading GCash service features, making it the #1 finance app in both iOS and Android devices. With over 1,000% transaction growth as a result of its expanding customer base, GCash is best positioned to capitalize on the accelerating shift to a cashless lifestyle as it continues to acquire fresh new capital. The solid footing in digital payments is also backed by Globe's best environmental practices to reduce carbon footprint by providing the country with sustainable connectivity while fostering over 6.8 million users to join GCash Forest. Globe's digitalization initiatives for financial inclusion anchored on SDG number 8 contribute to the country's economic development.
After proving the industry's favorable growth prospects, let's take a look at our fourth point. We expect Globe's revenues to grow at a CAGR of 7.8% over the forecast period, brought about by the strong demand for data services and its ongoing 5G and fiber rollouts. In fact, we forecast the revenue contribution of the data segment to expand to 89% in 2025 from 75% in 2020. On the other hand, Globe's ESG initiatives and the migration of its technology infrastructure to Amazon Web Service cloud storage allow the company to cut down on its costs. Means diminishing cash burn also contributes to net income, as Gcash enters its monetization phase. Thus, we project Globe's EBITDA and net profit margin to expand by 260 and 170 basis points over the next 5 years. Using the DuPont analysis, we have determined that net profit margin is the main driver for Globe's increase in ROE. We believe that ROE has the potential to further increase since it can be supplemented by Globe acquiring more debt as it has the financial flexibility to do so. Furthermore, we expect Globe to have sufficient cash generation to cover its capex, as we estimate cash flow from operations to grow to 101 billion in 2025 from 71.2 billion in 2020, while debt levels are forecasted to be well within Globe's loan covenants. Overall, Globe's sustainable earnings, strong cash position, and healthy debt levels grant it the capability to take advantage of emerging opportunities and maintain a high dividend payout. In arriving at our target price of 2,375 pesos, we utilized the DCF valuation method, discounting Globe's projected free cash flows to the firm and its terminal value using the computed WACC. We then deducted net debt and preferred equity to arrive at its equity value. At our target price of 2,375 pesos, our implied 2021 EV over EBITDA is 5.83 times, at par with its 5-year historical average. Comparing it to the current EV over EBITDA, we note that Globe has more room to trade before being considered fairly valued. Furthermore, to cross-check our DCF valuation method, we compared Globe's implied multiples against its comparable companies. Globe is trading at a discount to PE ratio and EV over EBITDA as compared to its peer median. However, we believe that Globe will trade at a narrower discount given its better ROE and ROA, stable profit margins, high dividend yield of 5%, and high EPS growth potential of 10.7% CAGR over the forecast period.
Meanwhile, we've identified possible risk exposures based on their probability and impact and analyzed how Globe mitigates such risk. In our view, the 3 key risks are: first, regulatory threats. Globe's cash flows will be impaired by regulatory pressures should they fail to deliver the mandated speeds. However, Globe mitigates this risk by hastening their network rollouts to strategic and underserved areas. Based on our sensitivity analysis, a 0.25 percentage point increase in capex growth per year would lead to a target price of 2,260 pesos, still holding a buy recommendation. Second, price wars. The availability of cheaper substitutes may lead to a higher churn and more downward pressure to its pricing. Globe mitigates this risk by having a wider network coverage, strong brand equity, and extensive price customization deals. Assuming a 3 percentage point decrease in mobile data and broadband revenue CAGRs, our target prices would result in 2,266 and 2,300 pesos respectively, still supporting our buy recommendation. Third, intensifying competition. High market share loss is imminent as Globe faces more competition in the local market. The company mitigates such risk by enhancing their product mix with higher infrastructure investments and aggressive cell tower expansion. It would take an 8.3 percentage point decrease per year in mobile subscriber market share to shift our recommendation to a sell. It is also worth noting that Globe's risk mitigation efforts and growth strategies are backed by the company's best ESG practices, spearheaded by its professional management, which in turn enhances Globe's overall value trajectory. To recap, we believe that Globe is a worthy stock pick in today's volatile market because 1. It is a seasoned player and captures the lion's share in the mobile industry. 2. The underpenetrated broadband industry presents Globe with untapped demand ripe for the taking. 3. It is well positioned to benefit from the rise of the new era of digitalization, with all of these supported by its robust financial performance. So, with a target price of 2,375 pesos, offering an 18.3% upside, we reiterate our buy recommendation. Indeed, Globe is gearing up to provide investors a network of endless opportunities. Thank you. We, Kairos Investments, are now ready for your questions.